Buckle up, my fellow investors, because we're about to embark on a thrilling journey through the financial landscape of City Developments Limited, or CDL as it's affectionately known. This property behemoth has just shattered revenue records, leaving its competitors in the dust with a staggering $4.9 billion haul. Brace yourselves, for we're about to delve deep into the juicy details that propelled this real estate titan to such dizzying heights. Imagine being a fly on the wall at CDL's FI 2023 annual general meeting, held just last month in April 2024. We'll dissect and decode the 7 pivotal slides that unveiled the company's stratospheric success, unraveling the key drivers that fueled this stellar performance. From soaring property development figures to strategic land sales and beyond, we'll leave no stone unturned in our quest to understand what makes this real estate powerhouse tick. But that's not all, my fellow investors. We'll also explore the implications of these financial triumphs, uncovering what they mean for those who have placed their faith and their hard-earned capital in CDL's capable hands. So, grab your notepads, sharpen your pencils, and get ready to take some serious notes, because this is an opportunity you won't want to miss. Join me as we embark on a journey that promises to be as enlightening as it is exhilarating, and together, we'll unlock the secrets behind CDL's resounding success. Slide 1. Today, we're diving into the key financial highlights for the fiscal year 2023. And let me tell you, the numbers are impressive. The company reported a record revenue of $4.9 billion, marking a massive 50% increase from the previous year. This stellar growth was primarily driven by the property development segment, which contributed a whopping $1.5 billion. A significant portion of this came from the fully sold EC project Piermont Grand, following its temporary occupation permit in January 2023. This allowed the company to recognize the entire revenue and profit upon completion, as per the accounting policies for executive condominiums. Additionally, the sale of a prime land site in Tokyo's Shirokane area further boosted the revenue figures. While the revenue soared, the company's PATMI, or profit after tax and minority interests, took a dip to $317.3 million from the previous year's $1.3 billion. This decline can be attributed to the absence of substantial divestment gains recorded in the prior fiscal year, coupled with higher financing costs for the current period. However, the EBITDA, a key metric for profitability, remained robust at $1.1 billion, excluding divestment gains and impairment losses. This figure, up from $2.3 billion in the previous year, provides a clearer picture of the company's underlying operational performance. Overall, these financial highlights showcase the company's strong performance, driven by its property development arm. While the PATMI dipped, the record revenue and solid EBITDA figures indicate a promising trajectory for the business. Slide 2. Let's start with the net asset value, or NAV per share, which stands at $10.12, a slight 0.4% dip from the previous year. Now, the revalued NAV, or RNAV per share, is more interesting at $17.12. This factors in unrealized gains from CDL's investment properties. If these properties were sold at market rates, there's a nifty $19.46 per share surplus baked into that RNAV figure. Moving on to dividends, the proposed payout is 12.0 cents per share, down from 28.0 cents last year. But with a dividend yield of 36%, the company is still returning a decent chunk of profits to shareholders. The real eye-catcher, though, is the share price performance chart. The stock opened the year around $8.23, but has since dropped to $6.65, a 19.2% decline as of this report. Ouch! Seems like market sentiment took a hit. However, the price did spike up to $8.35 during the year, presenting some attractive entry points for investors looking to buy the dips. Overall, while revenue and profitability may have taken a knock, the strong RNAV valuation and dividend yield could make this stock appealing for value investors willing to go against the current bearish tide. Slide 3. Let's start with the net gearing ratio of 103%. This indicates CDL has taken on significant debt compared to its equity base. A higher gearing can amplify returns during good times, but also increases risk if conditions turn challenging. The total cash balance of $2.2 billion provides a solid liquidity buffer to meet short-term obligations. The interest cover ratio of 2.8x suggests the company can comfortably service its debt from operating profits for now. However, the average borrowing cost of 4.3% means interest expenses could escalate if rates continue rising from current levels. Digging deeper, we see 45% of the debt is at fixed rates, offering some protection against rate hikes. But the average debt maturity of 2.2 years is relatively short, exposing the company to potential refinancing risks down the road. Overall, this snapshot reveals a financially leveraged firm with ample liquidity for the near term. But the high gearing, rising interest rates, and looming debt refinancing pose risks that investors should monitor closely. Slide 4. CDL has a solid portfolio spanning multiple countries, including the United States, United Kingdom, and Japan. Their assets consist of various residential and commercial properties like private rented sector units, student accommodations, and office buildings. With a committed occupancy rate of over 90% as of late 2023, they seem to be doing pretty well in terms of tenant demand and rental income stability. The total gross development value of their portfolio stands at a whopping $2.6 billion, with their largest asset being a $904 million investment in 250 operational units in Sunnyvale, California. They also have a significant presence in Japan with over 2,100 units across Tokyo, Osaka, and Yokohama, valued at around $656 million. What's interesting is the diversification across different asset types and geographical regions. This spread helps mitigate risks associated with any particular market or sector. Additionally, they have several pipeline projects in the works, indicating potential for further growth and expansion. Overall, CDL seems to have a well-diversified and sizable portfolio, which could make it an attractive investment option for those interested in the real estate sector. Of course, as with any investment, it's crucial to conduct thorough research and due diligence before making any decisions. Slide 5. This slide gives us a comprehensive overview of CDL's global portfolio and operations. With a staggering 23 million square feet of residential, commercial, and hospitality assets under its belt, CDL truly has a massive footprint spanning 28 countries worldwide. Their total assets are valued at a whopping $33 billion, which is a testament to their financial muscle. Zooming in on their Singapore commercial portfolio, we can see that their office and retail properties boast impressive committed occupancy rates of 97.1% and 97.6% respectively. This translates to stable rental income streams for the company. Over in the UK, their office and retail properties maintain equally high occupancy levels of 91.3% and 92% respectively. What's particularly interesting is CDL's strategic focus on enhancing their recurring income streams through their growth, enhancement, and transformation (GET) strategy. This involves initiatives like asset enhancements, redevelopments, and revamps to optimize their property yields. Overall, CDL's diversified global presence, strong financials, and forward-thinking strategies position them as a formidable player in the real estate market. As investors, it's worth keeping a close eye on their execution and future growth prospects. Slide 6. One key highlight is CDL's capital recycling initiative, which has generated a massive $632.5 million in total sales proceeds. This suggests that CDL is actively managing its asset portfolio, potentially by divesting or restructuring certain investments to unlock value. Additionally, the company's fund management business has grown significantly, reaching a sizable $3 billion in assets under management (AUM) as of December 2023. This could indicate a strategic focus on expanding their recurring income streams through asset management fees. The slide also outlines 3 strategic priorities for CDL's transformation: growth, enhancement, and transformation. The growth initiative involves co-investing with external parties, leveraging CDL's asset management capabilities to earn recurring fee income and grow AUM. The enhancement focus is on supporting and nurturing existing platforms, likely referring to the company's real estate and investment management operations. Finally, the transformation aspect aims to provide flexibility for CDL to inject capital into listed and unlisted platforms, potentially diversifying its business model and revenue streams. Overall, this slide paints a picture of a real estate company that is actively adapting to the changing market conditions, focusing on capital recycling, expanding its fund management business, and pursuing strategic growth and transformation initiatives. Slide 7. City Developments, or CDL, initiated a major share buyback program on March 8, 2024. Through open market purchases, they plan to buy back up to 10.4 million ordinary shares. This represents around 1.5% of CDL's total issued shares before the buyback. The average purchase price is $5.86 per share. This is a steep 42% discount to CDL's net asset value of $10.12 per share. It's also a massive 70% discount to their revalued net asset value of $19.46 per share. The total consideration for the buyback could go up to $61.3 million. CDL is acquiring shares at such value-accretive prices as they have strong confidence in the company's solid fundamentals and future growth prospects. By buying back undervalued shares, CDL can unlock value for shareholders and optimize their capital structure. This buyback demonstrates CDL's commitment to enhancing shareholder value through portfolio restructuring. It allows them to deploy capital into their own business, which they know best. Overall, it's a strategic move by CDL to strengthen alignment with shareholders by investing in themselves at attractive valuations. The impressive revenue of $4.9 billion from CDL is a clear demonstration of the company's expertise and significant influence in the field of property development. CDL, with its diverse international portfolio that includes residences, offices, hotels, and more, valued at an astonishing $33 billion, has solidified its status as a giant in the real estate industry. Whether you're an existing investor enjoying the success of CDL or considering becoming one, this is a company that certainly deserves your full attention. Their strategic purchases, strong financial performance, and innovative approaches, such as the growth, enhancement, and transformation strategy, make them a formidable player in the constantly changing real estate market. If you found this video informative and valuable, don't hesitate to hit the like button. It not only supports the channel, but also helps to spread the word about CDL's extraordinary accomplishments. If you haven't done so yet, make sure to subscribe to the channel for more comprehensive investment advice, company analyses, and financial insights that could potentially reveal new growth opportunities. I'll see you in the next one, Iguanas. Stay tuned, stay informed, and let's keep discovering the thrilling world of investing together. Until our next meeting.